think the retail investors in crypto are getting a lot smarter. All of the biggest crypto businesses, they still rely on one business model, being an exchange. I don't see them as investments. I see them as like very risky trade, almost like a call options. I know that I can lose all of my money, but if I get it right, this will return a lot of capital.
What does a retail investor have to look out for in 2025 to decide whether we're one or the other?
What happens after the Fed cut its rate and what happens after the US election? Don't underestimate the yield that you can get by staying relatively neutral in the space. One skill that a crypto investor needs to have, a lot more than a Web2 investor, is the understanding of public markets and macro cycles.
Yeah, let's just continue the conversation. Yeah.
Just get started.
Yeah, let's just get started. No, I mean, like I was asking you, like, does Adobe invest in like BTC and these other public market like?
Yeah, no, like as a fund, we do. We do have a balance sheet and then we looked at the liquid side. Yeah. We looked at the opportunity. So it's not always just private markets because it's internal capital. We have more flexibility to change our strategy.
Yeah, interesting. Marco, you've interviewed dozens of crypto investors and VCs actually. What sets them apart from Web2 investors, or what has been the real differentiator that you've seen?
I think at its core is that as a crypto investor, you have to know that you are investing in a subculture also, right? And I often see the mistake that tourists, like investors, go by sort of they see the opportunities perhaps every bull market cycle, and then they come in, but then when things get a bit scary, there's a little bit of uncertainty on the regulation side, they take a step back, right? And oftentimes those kind of like touristy investors, they're not going to have longevity on the market. So that's the core difference. Like, I think the belief that this is an industry that you want to be a part in needs to be very, very strong. It's less about something that, let's say, if you looked at a biotech space or like AI space or like space, like literal space, right? Space technology. You might sort of like shift from one sector to another, kind of depending on the market cycle. But for crypto, the alpha is like when you actually stay around at the bear market and sort of like build that relationships with the foundations, with the ecosystems, with the founders. So yeah, I would say that's the biggest difference.
Does it give you a clear advantage to be friends with the founders?
Oh yeah, I mean, like, I think as a fund, especially for, and I can't speak for like Primitive, but like definitely one message that we like is that we want to be friends for founders, and we realize that our role sometimes in a funny way is to sort of like be their therapist during like the hard times, right? Sometimes being a good listener and just asking a lot of questions and understanding the struggle that they're going through is a much more needed thing instead of like pushing them to like execute when it's the bear market. Like sometimes that is important too, but I would say the emotional part is definitely much more important.
Right. So you came from a TradeFi background, and now you're working in Primitive, as you mentioned. What sort of changed in your mindset, in the way that you approach investment, and just your overall worldview on how the economy works?
That's a very broad question. I think for me, I never really seen myself as a TradFi person, even though in my old gig, I served a lot of TradFi clients. I've always sat at the intersection of crypto and TradFi. So I guess for context, yeah, like I used to serve a lot of TradFi companies that want to get into crypto or have crypto departments, crypto initiatives. So I've never really seen myself as like a buy side on the equity markets or anything like that. So I've always been crypto native from the get-go. So I think the only difference that I see is that there are still two sides of the crypto markets, the ones that's more TradFi related, as you can see from the recent Bitcoin ETH ETFs and like all of the regulated products that are coming out. So that is one, I guess, like one segment of the market. And then on the other end, you sort of like have this pure on-chain world, pure Web3 for the lack of a better terms. And as an investor, you just need to sort of like understand where you are positioned and what kind of mandates that you actually have for your LPs. What's your style of what's your strategy? There's no one size fits all, but I personally is definitely enjoying the on-chain side a lot more. Yep.
Can Web3 be manipulated by VCs?
What does that mean again? I think this is a that's a very interesting question. I think let me put it this way: is Nvidia being manipulated, right? Like is let's say, or we can even use like other stocks like all of the SPAC moments, right, from like 2 to 3 years ago. I think what we're seeing right now is just that the returns in private markets, the returns in public markets, I mean, are being squeezed out because most of the returns are happening while the companies or the protocols are still private. So we are seeing this even in traditional tech, even in Web2, right? Like I forgot the exact numbers, but if you see like the amount of money that Uber raised for its Series A is much lower compared to like most Series A these days. So what's happening is that the private investors, and most of private investors are either VCs or PEs, they know that the opportunities are on the private market. So in the past decade, ever since we've seen the success of Uber, Airbnb, DoorDash, there are a lot more PEs and VC firms being created. So what happened is that this sort of makes the public markets dynamics a little bit more challenging, I would say, for the lack of a better term, right? Because the investment bankers and like all of the capital markets players, once it goes public, they need to keep up with the sell pressure. They need to understand how to manage all of the liquidity. And we're seeing this not with just US equities. We can see it with Grab, with Goto, right? With like a bunch of either like emerging markets, big tech also, the same thing is happening because the investors on Series A, of course, they need to exit. They have their mandate and like all of that. So I think that sort of like dumping from insiders, for the lack of better terms, are like they're not really insiders, they're just investors in the earlier stage. That selling pressure is what often being misrepresented by crypto Twitter as like, oh, it's being manipulated. But I think it's less about that. It's just about the private public market dynamics.
So how does a retail investor then come into an investment that has been originally invested by VCs? How should a retail investor think about that?
I think the retail investors in crypto is getting a lot smarter. So if you see just in this cycle in the past year in 2024, no one's bidding like altcoins, like L2 altcoins, or like no one's bidding tech. Only Bitcoin eats Sol, the three majors, or the meme coins, right? Yeah. Because the retail sort of like understands the game here. And that's also why, and I would even draw like comparisons with traditional markets. So retail is bidding Nvidia and like all of the AI stocks, but no one is like retail is not bidding China stocks. Alibaba and a bunch of these other stocks are actually trading at a very attractive price to earnings ratio right now, but no one is bidding them because there's no story around it, right? So I guess to answer your question more concretely. Retail these days are a lot smarter, so they understand the supply demand dynamics, the unlocks that are going to come. So as a retail, you have to pay attention to that mechanisms, and also I've seen some very smart. I guess you can say they're retail, you can say they're power users, but I've seen smart retail folks that looked at undervalued tokens that have been liquid for quite some time. So like let's say if a specific token went live 2.5 years ago, and now 80% of their supply is already out, right? And like they have been, and the price just been going down. Like some retail people, the really smart analysts understands that, hey, this means that there's way less selling pressure, and now it's relatively fairly priced or undervalued, and see if I can bid them. Just to give again an even more specific example, some liquid funds have even sort of like saying that Maker is now like a fairly good bid, right? Because it's fully liquid, there's no selling pressure, it's cash flow, it's generating profits. So now you can sort of like see this as like a more like blue chip tokens. Yeah.
Right. How do you think about investing in blue chips, for example, like Maker, that has been around for a long time, but may not have the same hype as something like Solana, which will go up with the tailwinds of the retail market?
I think once again, it depends on, at the end of the day, it depends on your risk appetite and your mandate. If you're a venture fund inherently seeks for outsized returns, right? And you're taking risks. You understand it that if you put money into 10 companies, 8 of them would fail. So a maker style investments will be more suited for liquid funds that have perhaps in their mandate, they might need to be able to guarantee their LPs that they're not going to see a more than 25% drawdown, for instance, right? And they are seeking for superior but much more stable returns, like let's say 30% annually or something like that. So again, it's just appetite, frankly, like how you sort of see that. And of course, there are outsized external factors that might reshape the entire story of these blue chip tokens and recalibrate their value in the market. So, for instance, Maker has indeed teased that they might launch their own chain, right? If they are ever to actually do that, that would reprice them for sure, right? Instead of like just a DeFi protocol to like a full-blown chain. So some folks might be speculating on that, but at the end of the day, yeah, it's risk appetite and mandate.
What do you think about meme tokens?
They're fun.
Do you invest in them?
Personally, I do trade. I don't see them as investments. I see them as like very risky trade, right? Almost like a call options. So I know that I can lose all of my money, but if I get it right, this will return a lot of capital. But yeah, I'm pretty neutral on it because I've seen some crypto VCs who like either think they're like the second coming of Jesus, like it's the most important thing, or some that like really hate them, like, oh, this sucks the liquidity out, it sucks the brain power from like smart developers that are trying to solve real problems. But the way that I see it is that if meme coins enable us to onboard, let's say, 5 million new speculators, right, all across the world, and from that 5 million, just 5,000 convert into like daily active users of crypto, that's fine to me, right? Because I kind of feel like you can argue the same thing with like 0-day call options on like Nvidia. Like that's just gambling too, right? So yeah, but of course, a lot of retail got burned. So my 2 cents there is just understand a bit more of like how a meme token is being launched, who's behind it, what kind of like prevention mechanisms that you can check, for instance, make sure it's not ruggable and stuff like all those basic things. You should look at those first before you start speculating.
Does Primitive invest in meme tokens?
We have done one that we cannot disclose yet, but yeah.
What's the reason for investing in a meme token?
Honestly, for us, it was more of like a beta play. Again, like I can't disclose the exact token yet, but it was more of in terms of like size and valuation, like all of that, it makes sense for us. And again, as I've said, so we manage internal capital, so we can be a bit more flexible with this. But yeah, like for us, it was a better play for a specific ecosystem.
So you've been with Primitive as of 4 months now, and you mentioned that actually just before this podcast, that it feels like things have been going very fast for you. What separates Primitive from the other companies that you've worked with, and why is it such a special VC?
Oh wow! I mean, I don't want to make this like a self-gloat moment, but yeah, no, I mean, like I've definitely been grateful for my time and opportunity to learn from the founders as well as the other team members. And I think it's special. I'm going to keep this very short. I think it's special because it's a very crypto native firm. It manages internal capital. It's been around forever. And it understands the true DNA of crypto founders. And it's really in the subculture. Like we don't sort of like pretend to be a crossover fund or have different mandates. In fact, we barely invested in any companies that don't have tokens, right? So like that in itself is, I think, what makes it very special. Yeah.
How does a VC firm like Primitive think about their investment, where you might see like VCs that are more Web 2 would think about they're solving a very challenging problem in the technology layer? Whereas when you take a look at Web 3, you could argue that a lot of projects that are coming out are rather the same. How does a company like Primitive actually think about that from a return perspective, and also from the impact that they're making in the world today?
Well, again, that's a very broad question. And I want to disclose, though, that I cannot definitely speak for like Primitive, right? Like I'm not the founder. But one thing that I can definitely share is that if you look at our website, a North Star that we have is that we do believe, as idealistic as it may sound, that crypto is a new like primitive for like sovereign individual. So if we take a step back and we sort of like create our thesis around, and if we just want to take a look at what's our broad thesis investing in this asset class, right? It's because we do believe that that asset class at the end of the day provides individuals with more sovereignty in the future. And just a small plug, I have written a blog post called Why Are We in Crypto? So you can, that sort of like goes into more details how I'm personally thinking about that, inspired by Primitive's North Star. From a returns perspective, I think a VC at the end of the day needs to be able to understands that like whether you're managing internal capital or outside capital, you also have the responsibility of making returns, right? So not every investments are going to be driven by these idealistic view, of course. Like sometimes it can be a bit more opportunistic, but at the same time understands that there's like a white space here, or it might be a type of product that we think can advance the ecosystem a lot more. Right? It can even be something as simple. And again, if we go down this rabbit hole, it's probably going to take hours. But why are people investing in like infra? Right? Because at the end of the day, blockchain is not fast enough, right? And the Solana maximalists might argue that it's fast enough and you should just support us and like all of that. But at the end of the day, until that is truly solved, you would see a lot of like smart engineers putting their time and effort into solving that, because that's also how they're mostly rewarded, right? Again, we can talk about the incentive games and like all of that, but yeah, to go and take a step back to answer your questions, we have a broad thesis for our North Star that's a bit more idealistic, like why are we in the space, why are we doing this, why do we like this asset class? But then as an investor, we have a mandate to generate returns, and to think about that, we have to be able to look at more opportunistic and also like product oriented type of investments.
Do you think that the deep state would allow for self-sovereignty?
I think that's also like why crypto is a very exciting industry. For those of us who might not be privy to like US politics, I think it's amazing what is happening with the US politics right now with relation to like crypto. I don't know. I mean, just to answer your question directly, I don't know. I mean, like, of course, there's always a chance of, I guess, like potentially like a nation state actors trying to destroy everything. But we have also worked towards making sure that in order to do that, it's very hard and very expensive, right? Like even until these days, like there's no nation that can 51% attack Bitcoin successfully, and I guess like without losing hundreds of billions in the like process. So again, the answer is I don't know, but I think it's an exciting space to work towards, at least for me personally.
In the last couple of weeks, Bitcoin has had a massive dump and quickly rebounded. I think like almost the whole industry has been affected by that. And it's largely because of like the macroeconomics that plague Japan and the ongoing wars. And Bitcoin has previously been talked about to be anti-inflationary, but starting to look like it is still affected by the macroeconomies. How do you think about macroeconomics as a whole, and how do you think about that as a part of your investment strategy?
Yeah, so let me try to be a bit more succinct about this. So I think one skill that a crypto investor needs to have a lot more than a Web2 investor is the understanding of public markets and macro cycles, right? For your conventional tech investor, your companies are not going to go public or get acquired until 5 to 10 years. And most of the time, you sort of like have less dependencies with the macro markets, other than perhaps trying to raise for your next fund, and you sort of like need to look at the LP's appetite. But for a crypto investor, you need to know the liquid markets very well, and you need to follow what is happening, because that is it's interconnected with the private markets, with how valuations in the private markets are being seen, with how risk aggressive private investors are. So I guess the way that we look at it is, yeah, I mean, it's very important, and we pay close attention to like all of the metrics, to what is going on with the yen carry trade, what's going to happen if the BOJ raise further rates, what's going to happen if the Fed cut rates on September, right? So we do pay a lot of attention to this, and those influence our decision in the markets as to like how aggressive we need to be, or when, let's say, we want to like pivot our strategy a bit more and focus on the liquid side, on like just, let's say, buying more Bitcoin or just buying more ETH when the price is going down. So again, there's no one size fits all answer to your question, but I would say, yeah, it plays an important role, and we take a closer look at it.
Do you think that things will change after this cycle, considering that there are a lot more institutions entering into the crypto markets?
Yeah, no. So that's a very interesting question, because I think it's already happening as we speak. So there are two schools of thoughts. One is that folks think that this cycle hasn't started yet. Like so far, what's happening in the past 8 months, it feels like the latter half of 2019. So if you were around in the H2 of 2019 to like Q1 of 2020, the price went up to like, I think 14, 15K, and then it went down to like 3K because of the COVID dump, right? Before it truly rallied in 2021. Some of the more bullish cohort is arguing that that's what's happening right now. So like we haven't even seen like a proper cycle. The other side of the other school of thoughts is arguing that not because of the ETF and the regulated products and the institutional player, that cycle, like the 4-year cycle that we have been used to, might be changing, right? So it might not be as volatile. And to answer your question, I guess I don't know, because one thing that we have learned is to adapt, right, to what the market is showing. But definitely, I do agree that there are right now those two school of thoughts, and kind of depends on like where things are in 2025. I think we will have our answers by then.
What does a retail investor have to look out for in 2025 to decide whether we're one or the other?
What happens after the Fed cut its rate, and what happens after the U.S. election?
Does that mean that it's not as beneficial to be building in the crypto space?
No, I still think it's the most exciting space to be building on. And we can talk for hours about this, but in my mind, it is still the most global space that enables capital from all over the world, as well as talent, to congregate and work with one another in a way that's not possible for any other sectors. Like you can argue that biotech is very specific in San Diego, let's say, and then like for other types of like innovation, it might be specific in other parts of the world. But crypto is one that has multiple nodes around the world. There's one in Singapore, one in Lisbon, one in New York, one in Dubai, right? And hopefully we will see a lot more of that. But yeah, I think it's still the most global industry.
When I speak to a lot of Web2 VCs, they don't really understand how crypto will be placed into the everyday lives of Web2 products.
Right.
How would you urge Web2 VCs to actually think about that? And what is it that you see coming up in the horizon 5 to 10 years from now?
Again, that's a very big question, but I would encourage Web2 investors to understand that this technology is inherently financial, right? So I think a lot of Web2 investors want to take a look at this as like, oh, this is a pure tech play. No, like it's at the intersection of tech and financial, right? So any use cases can be something as simple as like stablecoin, right? Like stablecoin has the clearest PMF out there, right? And that is integrated already to like a lot of people's lives. And you might argue, okay, then it's just like an alternative for like Visa or like for Swift or stuff like that. But what I'm trying to say is, for a technology that's inherently financial, it's going to take some time before it can penetrate our daily life. And I would encourage the Web2 investors to take a look at the upcoming consumer app in crypto. Especially in the past year, we have seen a lot more focus amongst founders and investors into backing consumer app. And there are a lot of, again, this can take for hours also, but there are a lot of different styles of crypto consumer apps. Like one that's sort of just like mimicking Web2, but with the token, with a token element. Others that sort of like understand truly how to integrate incentive design via tokens to make their like applications a lot better. Yeah, but if you ask me in the next 5 to 10 years, I'm definitely more on the camp that we will still see more financial first applications instead of like an Uber but with like a token. Like I'm not like, that's not really my personal thesis. Like I think if that happens, it's probably gonna be towards the tail end of the tenure. But I think we will see like more financial applications on a day-to-day basis. And then also on the side that might not be as interesting for the Web2 investors is that every discussion around tokenization, around on-chain stock settlement, that will definitely happen. It's just that it's very behind the scenes and you might not feel it. But like, let's say if it takes you 2 to 3 days to like send money, right? It might only be taking you like 1 or 2 minutes, right? In the next 5 to 10 years, and will be integrated to like multinational banks, let's say. But you might not feel like, oh, this is because of crypto. Yeah.
Do you believe that companies like Firecaster will survive?
Oh, tough. Man, I mean, they just raised a lot of money, right? So I'm sure they would survive.
So how do they win against X?
You know what? Honestly, they need to be able to go outside of the crypto bubble, right? I do like their products, but I feel like if I go there, there's not much discussion outside of the crypto bubble. So I think whichever consumer app that's going to win is going to start bottoms up, actually. Like they are going to focus on your everyday consumer, and that's easier these days with like chain abstraction, with like you can obfuscate wallet now, as I'm sure you know. And so like I'm thinking that eventually you would see those like breakout applications, and those are the type of consumer products that would win. Now, specifically for Web3 social media, I think that's very hard. But I do think they will be able to like slowly and surely, let's say, like win specific sectors of the internet. So like maybe a bit more like Reddit, like it's used a lot for like if you want to discuss about, I guess, like investments. It's like you can go really deep on it, but like right now it's definitely an uphill battle for them, and that's why they raised that much money, because they need those capital for sure.
So what's the play for a VC who invests in Firecaster when they know it may not win?
You might need to ask them directly. No, but like to answer your question, large VCs need to be able to deploy their capital. So they need to find ideas that are big enough, right? And we can argue whether that's right or wrong. Like it's not really my place to chat about that. But if you have to generate returns on billions of dollars, then you need to be able to deploy that money into companies that are trying to be multi-billions of dollars, right? So it might seem kind of crazy from the outside, but I do understand their framework and why do they decide to approach it that way, right? Because like otherwise, it makes less sense to deploy the same amount of money to 20 companies, because that's not like they're not going to be able to give it as much focus. They're not going to be able to create the network effects that they want to see with their investment. So really, it's just a matter of like how much money you're actually managing and how much money do you actually need to put to work.
Right. So then, how do you justify a $225 million raise for Monad?
So. For Monad, yeah. I think what's happening there is it's pretty clear that they're exceptional founders. Like they have great backgrounds, great credentials. And I think sort of the vision that they're selling is that imagine if you can have something on EVM, so it's so you can easily integrate it with like Ethereum and like all of the other L2 chains, but at the speed of Solana, right? Like that's sort of the promise that they have. And I think that promise is definitely big enough for, again, these VCs with multi-billions that they need to deploy, right? Like I think that's one of the core reasoning that we have to understand here is that they have to deploy that capital, right? So if you go out there and you're shopping for projects to invest in, you have to find founders that have exceptional background that you think can deliver and execute on this goal, and the goal needs to be big and ambitious enough to the point that it can justify the amount of money that you're putting to work. So I mean, let's assume that if they can take I don't know, like 10-20% of like Solana market share, right, in the next 3 to 5 years, that would still return a lot of money for the backers. Like that would return like 10-20x still. But again, that's a big if, right? A lot of people might see, oh, that's a very big if. Yeah, but if you have to bet for these folks, I do understand where they're coming from. Let's just say that. Yeah.
How does a Web3 VC hedge against these very risky bets? Because that's a big if.
Yeah, right? That's a big if. Again, it depends. If you're a pure VC with outside capital and you don't have the flexibility to do a lot of liquid strategies, you don't really hedge, frankly. Like, I mean, like, this is the same thing with like Web2 VCs also. Like the Web2 VCs that raised hundreds of millions, they invest in like emerging markets companies, and like some of them are not audited. It turns out it's like pretty shady and stuff like that. They are not hedging it at all. But if I know that, like, let's say if you're like a crossover liquid and venture, you can hedge by shorting majors, like shorting ETH. Like I've known crossover fund, like they're not pure venture funds, but they're like partially venture, partially liquid, that when they do investments, they also, let's say, write options for ETH so that they cap their downside, right? But then again, also they're like capping their like upside, as I'm sure you know. So yeah, there's a lot of different strategies, but there's no one size fits all.
Yeah, previously we were talking about how ChatGPT was very essential for the AI market. And it really aged in this new idea about how AI can be used on the retail level. And we've had a conversation before how you think that Web3 hasn't had its ChatGPT moment. Is that still true?
I think if we are simply looking at the metrics, yes, that is still true, right? I mean, like there is no consumer product that has reached the amount of users as many as ChatGPT in the same amount of time. At the same time, I know folks who are watching this might argue that Binance has 200 million users, so that's more than ChatGPT perhaps, right? But there is no day-to-day use case that people are willing to pay for yet that's not speculation-driven, right? So like folks are willing to pay $20 for ChatGPT, for Perplexity, because it does provide you with a superior product and you want to pay for it. But all of the biggest crypto businesses, they still rely on one business model, being an exchange, right? No matter if it's like a DeFi protocol, if it's like on-ramp, off-ramp, it's an exchange, you're charging a fee for facilitating value transfer. So that's what I meant when I said that I don't think we have seen a truly sort of like a superior product that people want to pay just because of the product. Yeah.
What do you think that will look like?
Very tough, man. I think it will still be something that revolves around making your financial lives easier. At the very small level, we have seen some wallets are trying to do this. Like DBang allows you to like pay them a monthly subscription if you want to see the historical P&L of your wallet, right? Like that's a very, very small thing, but let's say like crypto power users are paying for that. But we still haven't seen any consumer app that can inspire your everyday users that don't really care about financial markets and don't really care about all of that to pay for a product, to pay for like an on-chain product that they truly care about. And there's a school of thought that argues it might never happen because crypto is inherently financial. So it might be that anything that people like to use needs to have some sort of like tie back to financials. And I don't think that's entirely bad. It's just that we'll have to see how the landscape evolves. And just to really summarize my thoughts there, I think a lot of that is because of regulation. I think it's because you can't really create a product that is superior, charge fees for it, and then somehow accrue that fees back to the token, right? Because it's very hard to do that. Even recently, Andreessen Crypto wrote a blog post, a very good blog post, on like a potentially new legal structure that will enable that. So again, I'm not going to explain the entirety of it, but it was just released a couple days ago. Basically, they're arguing that they think they have figured out a way for protocols to sufficiently share fees back to the token holders while still being as compliant as possible.
I see. There's a lot going on in the Web3 space. The Web3 space moves very fast. And you yourself, before you joined Primitive, were already quite diverse in the Web3 space, having written your own newsletter, having been quite active on Twitter. How do you filter out this information?
Very good question. I think you need to spend some time and really systemize and map out your own information flow. So let's say crypto Twitter is a very broad word, right? But if you go down the rabbit hole and you see like how folks are replying to one another, spend time to actually see who they are replying to, what's their background, what's their past work. Slowly and surely you would sort of like have a map on, okay, these folks are the DevRel people, these folks are the BD people, these folks are the ecosystem, these are the investors. And slowly but surely you would sort of like understand who are all the industry players. And crypto is still small enough that pretty much the 5,000 people that goes to the same conference every year are the only people that you would need to know, right? Like it's still small enough. So yeah, just there's no secret sauce there. Just you do need to allocate some time to like properly map out your own information flow. And for crypto, Twitter is still the best.
Is there a few people that you would recommend to follow?
Ooh. Well, I gotta plug in my own boss, but other than her, I think it depends on whether you want to follow founders or investors, stuff like that. But if I can name a few, definitely, other than the founders of projects, like other than like Vitalik and like Anatoly and like all of those big people, I would follow, I think Kyle from Multicoin has a pretty good take. He's one of the bigger investor out there and he's very outspoken. That's why his tweets are interesting. It's not like these boring, like safe tweets. So he's one. And then maybe on the builder side, David Phelps, he's the founder of Joke Race. I think he writes a lot of great articles and also has a lot of funny tweets. So yeah, those two, Kyle from Multicoin Capital and David Phelps from Joke Race.
Right. One last question from me before we wrap up. Any things to invest in?
Let me answer that in a different way, but this is not a cop-out answer, I promise you. Don't underestimate the yield that you can get by staying relatively neutral in the space. So let's say if you're not super bullish on Bitcoin ETH and you think they can still go up, but they can only go up 2x from here, let's say. There are a lot of like safer yield products, whether that's like an Ethena-based kind of strategies or a more riskier like HLP, hyperliquid, like Jupiter JLP style that still will give you most of the upside, but will really protect you on the downside. So like if it goes down by 50%, you might only lose like 15%, right? So like don't underestimate that because I think a lot of people got burned trying to chase the next whiff, right? When you can compound your capital properly with these yield strategies, and if you have like a larger base of capital, it can offer a really great return. And of course, that's not financial advice, but yeah, just study the yield markets.
Awesome.
Yep.
Marco, thank you.
For sure.
Thank you for your time.
Thanks for having me.
Yes.